This week's real estate and mortgage rate update. Let's jump into the numbers. Okay, so national average 30-year fixed rate mortgage 6.72 as of last Friday. So rate sheets look a little bit different today, and I'm going to jump into the reason why. We had a bit of selling off in mortgage-backed securities. So as I've mentioned in previous updates, really the key thing here is rates don't go up or down unless this goes up or down. Green and up is good for rates. Red and down is bad for rates. This is the bond that controls mortgage rates. So what's happening here is, if you can imagine, there's a finite amount of money in the marketplace with personal investors, institutional investors, so forth. And what we're seeing today is what's called risk-off investing. Money is flowing into equities. That money has to come from somewhere, will come out of the bond market and go into the equities. And the reason being is because some of the tariff stuff that's coming down, which kind of freaked out the market for the last week or two, has settled a bit with the expectation that some of those tariffs are going to be tempered somewhat. Those are beginning in April, and they're starting to see like what's actually going to happen with those tariffs. And so as a result, we're seeing kind of a boost in the stock market, but that's at the cost of the mortgage market and treasuries for that matter, because yields are up on treasuries as well. This week, big day Thursday, which is the final GDP numbers. Those estimates have been coming in softer than expected. And you'll see a news piece out there about, is there going to be a recession, and does that benefit home buyers? And then also Friday is huge. It's the PCE, personal consumption expenditure. It's a big inflation report. It's often what the Fed uses to make their determination as to whether or not they're going to either cut rates or raise rates. So big day Thursday and Friday. Last thing I wanted to touch on is the chief economist for NAR softened his expectation for 2025. He originally expected home sales to rise 10%, 9%. That was back in November when he forecasted that. He's since dropped that to 6%, feeling that until mortgage rates come down in a measurable way, we're going to continue to see things kind of soft from a sales standpoint. So stay tuned for, I might jump in on Friday depending on how PCE looks and do a quick update then. All right. Thanks so much. Talk to you soon.